Hi traders, I want to show you an example of a bearish crab pattern that's set up on a 30-minute chart. This is a pound dollar 4-hour chart that we're currently looking at. And the first thing we want to do before we even consider looking for patterns, once again, is identify higher time frame key levels of support and resistance. So you can see we've had a nice drop down, prices rallied, retraced again and starting to rally. If we take our Fibonacci tool and we draw it from the very high down to this low right here, okay, so your price has rallied up to that 50, starting to retrace. You can also start looking at using your Fib tool again and just have a look at the higher time frame areas in terms of confluence. See this 618 here with a 127 extension or projection. Prices dropped, rallied. Okay, so nice bit of confluence there. Obviously we've hit the 50. So next level is obviously this area here in terms of Fibonacci confluence, 791618, and slightly higher we've got some confluence there. So if we take a horizontal tool, we just drop it from the high and just work our way down. Okay, we want to highlight areas of resistance. Obviously that 886 area looks really good. Okay, see that last bearish or last bullish candle for price breakdown. Working our way down here, 791618. Also, it doesn't look too bad. A little bit choppy in here, but I'm sure we'll fine tune it. 70.7 looks really good. Okay, see here, spikes here, resistance, holds at this base and then releases. And then if we have a look at this confluence here, okay, see this area here, we've got resistance. Look at the wicks here. Holds a little bit here, closes back below, comes back, retests that area. We've got resistance, support, and you see this area right here. I want to have a look at this level on a smaller time frame. We're just going to have a look at the hourly chart here. See this area right here. You see this base, this block, order block here before price breaks to the downside. Okay, that's an area there you want to pay attention to. Okay, price hasn't been up to that level yet, so that's definitely something of interest to us. So if we now move over to the 30-minute chart, this is where the pattern set up. I'm just going to get rid of this big fib. Okay, if we just zoom this up, we had price sort of trading in this range here, and we had a drop. Okay, and we have a look at this swing here from this high down to this low. See price rallied up to that 62% and then started to retrace. Okay, so when that happens, in terms of price hitting a fib level, you want to think about patterns. Okay, now either a Gartley at a 79 level or the possibility of a crab pattern. Now remember, we want to find these patterns at higher time frame key levels. That's very, very important. Okay, with a crab pattern, you'll find the completion area. You see the 1618 here. It's completing at that higher time frame key area up there. Okay, so if we just have a look, and I'll move over to the 15-minute chart. You can also see it. See the structure here a bit clearer. So there's the drop. Price is rallied up to the 62 level and consolidated. So if we draw fib from the low up to the high, okay, see the retracement here. It's just short of the 62. So there's the first confluence area that forms the Gartley. Further up from that, we've got the 1618 and the 2618 right there. Okay, so that's the level that's completing at that higher time frame key area. And if we just highlight this level right here, let's just look at where that is on the 4-hour chart. So that level right there, see the 1618 and 2618 completing right up at this 62 level from the big drop, with that area of horizontal support resistance and that hourly order block there. Okay, so that's a nice level, and then obviously further up we could also look for patterns. So if we now move over to the 30-minute chart, so this, if we label this, this is X, this is A, this is B, this is C, and you're looking for a completion point at D. Okay, so just follow price here, step forward a little bit. So there's the 79,127 projection that forms the Gartley. So you could look to trade that if you had a key area. This one did drop off a little bit, and then it started to see it did hit this area coming down into this level right here of support, and it starts to move up. So if it takes out the highs up here, you see it's taking that high out, you want to start thinking about the possibility of a crab pattern. So I want to go to our order platform, new pending order. We want to sell at, let's put 5957, so I'll be a pip below. Okay, it's still a small time frame pattern. This you could use 2 pips below if you wanted to. Actually, let's go 2 pips below. In terms of stop loss, as I said before, you don't need massive stops on this. Okay, you really don't. If the pattern works, they normally work pretty quickly. So we could use 56 stop above here. Let's go around. Let's put 20 pips in and just see where that is for now. I just want to place this quickly and see where that stop loss is placed. So there's the 2.0 area there. Okay, that's a 20 pip stop. We can definitely actually look to probably reduce that a little bit. I just want to see where that comes in on that hourly block. When you get these order blocks like this, okay, you want to put your stop loss above or below them, in this case above. So that's definitely something. You see this block here, okay, if the orders are stacked here, this area should definitely hold. So what's about above this little high here, about 4 pips. Okay, we've got to take the spread into account. So I think 20 pips is pretty reasonable. Let's just move over to that 30-minute chart. Step this forward. See how we've just missed the level and then price retraces. Now if it does that, you've got a choice of either pulling your order, okay, in the likelihood that the orders are now being taken out of with this spike up, or you can keep it there. Okay, there's no right or wrong way. You can see prices obviously now continued higher, spiking up into this level. So now we get a bit of a reaction here. In terms of managing these trades, you see these highs in here and this base. Okay, we've consolidated here. Now ideally you'd like to see price scream up the page here and fill the order, okay, instead of having this range or this base being built here, because this is a problematic level that price now needs to clear in order for it to head lower. So you definitely want to pay very close attention to this area right here. Okay, very, very important. So what I want to do, okay, our stop loss is still above that area. Just want to show you that hourly chart quickly. I'll just compress this. So you see prices spiked into this block here, this order block. Okay, in terms of what this pattern looks like, or what's going on the candles here, still looking a little bit on the bullish side. You see this big candle here, okay, big close right up at the level. That's an indication that we still have quite a bit of buying pressure coming in here. This area here and here, this block right here, this order block on the hourly, is an area I want to watch very, very closely. So we just move over now to the 15-minute chart. Just step this forward. So price is now breaking down. I want to watch this level here. Okay, I want to micromanage this a little bit. You've got resistance, support. If we can get a close below this level, I want to get some risk out of the trade. So there's the close below. Okay, we're up about 17 pips and we're coming into this danger zone right here. Okay, let's just have a look at the hourly chart, see what that looks like. Haven't quite closed on this hourly candle. Okay, so it's going to be important to see where we close. But now that we start to break down, what I want to do is I want to get my stop down to just above this high here, 59.68 area. Okay, so if we go modify 59.68, I'm going to put it at 71. That includes the spread. And I want to watch this area here. If we start getting a heavy reaction off here, I want to start getting a stop to break even. So you can see price has bounced off this block right here. You see this area we marked off. Okay, there's a 30-minute chart. You see this area comes back, respects the base. Now we need to see price. You see this level here on the 30-minute. Really need to see price stay below this level. Okay, so that is definitely not a good indication in terms of coming off this block right here. And in terms of getting your stop up or down now to break even, you could definitely look at doing that. As I said, I like to give the trades a little bit of breathing room. That's just my my preference. You see how we come down, we have resistance, we have support, we have resistance, then it comes back and tests the level. Okay, it gives you another area. If you really want to be sort of actively managing it, you can put a limit order to actually buy and close your position off as price comes back to retest this. Okay, now it's spiked up. Let's just follow price along, coming back down now. See, it just spikes into that block, more orders. This is not looking too good at the moment. Starting to release. You want to see a close, and now paying very close attention to these lows here. So here price is spiked into this level. You see it's still not closing below this low. I want to have a look at the hourly chart here. Where close comes back, retests this area again. Still not really committing below. You see this area here? That's our problematic level we want to pay very close attention to. And I want to have a look at that 4-hour chart. The 4-hour chart, get a bit of a reaction off here. Okay, but you see this base here? That's something we definitely want to eye out. Okay, just go to the 15-minute chart. Follow price along here. Okay, so we're getting another bullish release to the upside here. Okay, this is obviously not good for the trade. Coming into this area, tapping it again. As I said, depending on how aggressive you are, you can move your risk down on this trade and get to break even. I like to give it a bit of space. I like to give it a bit of breathing room. And you can see price spikes up here. Okay, it's taken our stop loss out. So we're out at 15 pips. I'll show you the hourly chart here. Okay, builds that base, comes back, tests that area of support. As I said, it really depends on how aggressive you want to be with your management. There was some pips down here. You can take profits at the first level of resistance, turns into support. Okay, we are at a higher time frame level, so that's something that definitely wants me to give it a bit of breathing space. You see how we spike up here? Let's just have a look at this quickly. I'll show you that area. Spike up into this 70.7. You see this level here, this base, and then eventually we start to break down and come right down further into that base. Okay, so that one took a loss on the trade, and out for 15 pips. As I said, depending on how you want to manage these, if you're very aggressive, get your stop down to break even or get risk out. But remember, you've got more chance of missing out on the real big moves like this. You see our price now comes back, taps the back end of the trend line in this little order block here, this last bullish candle, and then release. You've got more chance of missing that if you overly aggressive with your trade management.